Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. It is Wednesday, January 25th, 2017, and this is the Daily Report for Gold and Silver. We have certainly seen a milestone reached as the Dow Jones Industrial Average for the first time in history has broken above 20,000. Truly a historical moment in terms of U.S. equities. The net result to precious metals is obviously downside pressure, with both gold and silver trading lower on the day. This morning I sent out a special trade alert recommending that all subscribers cover positions and pull profits. Nonetheless, the profits left were a lot more diminished than they were a couple of days ago, but we were able to pull out of these trades with some profit rather than any loss as our first trade of the year. Of course, we'll go over that in more detail once we pull up our first chart. First, let's take a look at some of the net changes. $11.99 down $11, and that would be most active or current spot gold, which is trading off of the February contract. The low on the day was $11.9260 with a high of $12.09. But what's important to us really is April gold, because we did roll over into April, low $11.9530. Of course, that's important. Our stop was below $11.95, and the high on the day was $12.12. Market currently trading off about $12 at $12.0180. When we look at silver, we're still actively looking at the March contract of silver, which is down about 1.1% on the day, below $17 at $16.99. The low $16.78, and the high on the day has been $17.13. We'll talk about that trade also as we pull up our first chart. So traders, absolutely no doubt, some pretty strong downside pressure today, this following yesterday's moderate to strong downside pressure. And of course, as I said at the beginning of the show, we absolutely sent out a trade alert recommending that we cover all long positions. We're covering them with profit, although a lot less profit than we would have had 2 days ago. But nonetheless, our first trade of the year is going to end up being a profitable trade. But let me explain what prompted, more than anything else, the sell trigger that we got today. If you recall, and we'll look at this through the eyes of most active, which is Feb gold as well as April gold, because we did roll into that, but we had two distinct patterns that were recognized in a candlestick pattern. This pattern here that you're witnessing is really a dark cloud cover or an engulfing bearish, and that of course is on our daily chart. And traders, I have converted it to a candlestick chart where I had that up to look at the lows, but I realized I can see the candlestick pattern on a bar chart, but many of our subscribers cannot. So once again, we did identify a pattern. The pattern that we're looking at right here is a dark cloud cover. A dark cloud cover is pretty much an incomplete engulfing bearish in which the market opens above the trading session of the prior green candle and then closes at or below the midpoint. And that's what gives you that dark cloud cover. Of course, if this red candle would have closed below the full body length of yesterday's candle, it would have been an engulfing bearish. So we are seeing a dark cloud cover in both the February as well as the April contract. Now, also, as I said yesterday, to take this as a sell signal, we would want to see a confirming candle. A confirming candle would be a long red candle with a lower low and a lower high. We certainly got that today. You can see that here. The low on the Feb contract was 92, and it was 95 on the April contract. But here's the other thing that to me stands out more than anything else. The fact of the matter is, when we create a support trend line by simply putting together some of these lows that are in the market and extending that line forward, yesterday's activity certainly stayed above that support line. Today's activity certainly took us below that and then took us into that kind of a bearish sentiment that this pattern is really indicative of. Then when we take a look at where this market could potentially go to, if in fact we are witnessing a sell-off, we have a couple of key areas. The first area is going to be 1198, and it could stop here, but 23 would be an extremely shallow retracement. More likely than not, we would see this market go to roughly a 38% retracement. And of course, this fib retracement is a retracement from the beginning of the most recent rally at about 1123 up to the top of this rally at about 1223, and that's this top right in here. When we do that, we get various levels in terms of our retracement. Now, so 1183 would be still be a shallow retracement, because we'd be looking at a market that started at these lows, traded up to this high here, and then retraced to a 38% retracement, and then moved into a second leg of a rally. Now, the other potential or possibility, if in fact this market continues to track lower, would be a deep retracement, and that retracement would look like this: $100 rally, 61% retracement, and that would take us to about 1161, and then a resumption of the upward leg that began end of last year, beginning of this year. Now, all things being equal, even if we find support in this area, we pulled a small profit and we'll re-enter from the long side. But for right now, I think that there is an increased probability that we will see a continuation of this lower pricing. So traders, as far as silver goes, I did recommend that all those who entered the market from the long side, you got in roughly at 1665. You got out roughly between $16.95 and $17 per ounce. A net result was about a 29-cent gain on the trade, or about $1,400 per contract. Of course, each contract is 5,000 ounces in silver. Now, the market's moved up a little bit from there, and that's really due to this dollar weakness that we have seen come into the market over this last hour. But nonetheless, the same can be said when we look at silver, in that we have, in essence, broken below that long-standing upward support trend line, although we haven't closed below it. But my sense was that, and let me try to put this in just kind of happenstance, as you can see, we're right at this point, but you can see this extreme low right in here. We did get out nonetheless with a profit, and if we see support come into the market, we can easily re-enter the trade. But my sense was that we certainly have seen this market turn around. Now, the pattern that I have identified in silver is quite interesting, but it's a really strong variation of what's called a tri-star top, and it's composed of more candles. But in essence, what a tri-star is you have a star, and then you have a star. This is that tri-top. And you're kind of getting that with this star here and then here. It's a loose representation of a tri-star, but nonetheless, it's a very rare pattern to see small-bodied candles in that kind of formation. And when I get that, I typically want to look at the weekly charts. But as I said, for right now, we are flat in the market. We have exited all of our trades with small profits in both gold and silver. In other markets that we follow, you cannot say enough about the fact that the Dow Jones Industrial Average really blew through 20,000 like a hot knife through butter, so to speak, with a vengeance. Currently trading with about a half hour left in trading at 20,062, up about 150 points. The high 20,082. So we certainly are closing at a new record high, an all-time high in the Dow. The same can be said for the Standard & Poor's. Absolutely an upside breakout, up about 0.75% at 2297.18. The high today, 2298, so we're just off the high on the day, but a tremendous upside move in the Dow, in the Standard & Poor's, and the NASDAQ has just blown away, up 47 points, up almost a full percentage point. This being the NASDAQ 100 E-mini at 5143, a tremendous upside move. The other market that we do want to take a look at is the dollar, and the dollar is actually showing some weakness, which is what has brought in the precious metals off of the lows. The dollar was trading nominally lower in the morning, but as you can see at this point has accelerated down almost 0.4% below 100 at 99.96. So traders, with approximately 5 minutes to go before we have settlement, we are witnessing history. It might not be as historical as breaking the sound barrier, but today the Dow Jones Industrial Average broke above 20,000. Absolutely a historical milestone, up about 162 points, a net gain of about 0.8%. We are looking at a weekly chart. This weekly chart is in standard bar chart format because I want to focus on our highs and lows, and you can absolutely see that we're closing up pretty much at the high. We're at 20,074, and the high on the day has been 20,082. So very, very little movement, very little distance, I should say, between the absolute high, intraday high, and what we're looking at, which is the close, which is now at about 77. We could easily close on the highs or have a new high on the close. And as I said, all of the averages have new record highs, and we certainly want to look at that. Now, where could the market go from here? Well, we're now in uncharted territory, so we're going to have to either create Fibonacci extensions, which will basically look at these price moves of the recent rallies to retracement, recent rally to retracement, recent rally, and from that point we will extrapolate the distance moved and then target a move up above. But preliminary studies have told me we could easily see this market over the next 6 months move another 500 points to the upside if the tact or the level of acceleration, meaning how quickly it moves up 100 points to the next 100 points, is maintained. We could easily see another 500-point move. Consider this. The Dow, prior to the election, was sitting at 18,000. We have seen a 2,000-point move in the Dow Jones Industrial Average in under 3.5 months. Now, let's contrast that to what we've seen last year, in which we saw the market, in essence, move from, let's call this 1,500, it's a little bit above 1,500, to about 1,700, and then sell off, and then up to 18. We saw roughly a 3,000-point move in about a year of trading time, as opposed to a 2,000-point move in about a 2.5 month period of time. Traders, we are looking at a weekly chart of the S&P 500, up 0.8%, an 18-point gain at 22.98. Now, the weekly chart clearly shows that we had some resistance in that this top was sitting at around 22.80, and today's move definitely propelled us to a new record close, and we are sitting up near the highs of the day and the highs of the week at a new historical high close. And traders, lastly, in terms of market indices that we look at, is the NASDAQ, this being the NASDAQ 100 E-mini, up almost a full percentage point. But unlike the Dow and the Standard & Poor's that really genuinely had a top in the market that it finally broke above, for the last 3 weeks, we have seen the NASDAQ climbing higher, last week closing at a new historical high, and certainly this week at yet another historical high. We have had some dynamic upside moves in this tech-heavy index. And traders, lastly, want to look at the dollar index, and what we're seeing in the dollar index is really a continuation of the weakness that has been present in the market. We're looking again at a weekly bar chart. We can see that over the last 3 weeks, that's these red bars, we have had consistent lower lows, consistent lower highs. We have now broken below 100. And that is significant because right now, as I spoke about, I believe the other day, it might have been Friday if it wasn't on Monday, but we don't really on a technical basis have any real support until 99 on the dollar index. We are now about 1% away from that price point. Traders, there's absolutely no doubt this most recent move in the Dow has really turned its head on the precious metals, and I believe is part and parcel to what we witnessed today and yesterday as this market began to sell off. When we looked at our charts, as I said, we have identified on our daily charts a bearish harami in the cash market or spot market of gold, a dark cloud cover confirmation in April contract of gold. And the fact of the matter is that when we looked at the basic uptrend and the resistance line that was formed from that, we had a solid break below that point. Now, we could in fact see this market stabilize and move up from here, but there's also a pretty strong probability that we'll see continued downside pressure to the target areas I spoke about when we looked at our chart with these new Fibonacci retracement numbers, in which we're looking at two key areas, really 61.8 as well as a 38% retracement of the most recent rally. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review.